Well, hello there and welcome back. I'm Daisy McAndrew and you're watching Cybos TV on this last afternoon of Cybos 2014, broadcasting live from the Boston Convention Center. Now, we're looking at milestones in securities, and just look at the smorgasbord of expertise I have at my desk here with me. I just wish that you could have been with us for the pre-chat that we were just having. Believe me, it was quite lively. I have high hopes that my gentlemen sitting alongside me are going to be very interesting over the next 15 minutes. Let me briefly introduce to you who we've got. Charlie Ruffle on my far right from Kudu Advisors. Welcome to the program, Charlie. Robert Kay, Global Custodian. Welcome to you, Robert. To my immediate left, Marsh Carter, probably needs no introduction, formerly of State Street, now of New York Stock Exchange. John Gubert to his left from UniCredit. Good afternoon to you, John. And Satvinder Singh from Deutsche Bank on my far left. Gentlemen, welcome to you all, one and all. Now, we are talking about milestones in securities, the global custody market, how it's changed over the past couple of decades. Charlie, I know you've been around a while. Take us back for a look at the last 25 years and how things have changed.
I've been around a while. I must say, I don't like the sound of that.
Apologies.
The interesting thing about our business is, on the face of it, the global custody business and the securities services business in general, it's changed a huge amount. I'd argue that the changes have been episodic, tactical, on the margin. The reality is a lot has stayed the same, and I think that's in no small part a function of the fact that you can't change an industry that has to function every day. So really, change at the margin is what it does. It certainly changed from a personnel standpoint. I think the five people sitting on this panel are about the only people I recognize at Cybos today. It's changed from a player standpoint, in that when this business really began 25 years ago, virtually every bank was in it. Now, particularly in the global custody business, there are 5 global custodians. So a lot has changed in that regard. I think probably the best way to look at, the best lens to look at this business is to understand that the changes made are going to be, by their very nature, tactical and not strategic. There are no real new players that have entered it. And the problem is, quite frankly, that new problems arise, and we obviously have a whole new regulatory dimension that every player in this business needs to navigate. But by and large, I would argue that the industry hasn't changed probably as much as it should have. It works, and that seems good enough.
Robert, would you agree more change is needed?
I think in terms of the post-trade securities administration globally, I think the industry has done a good job. I think it missed a significant trick as far as the front office was concerned, particularly when it comes to standard setting. I think there have been some strategic moves, mainly in the area of consolidation. I look back to one of the most hostile takeovers of a hostile takeover decade in the 1980s, and that was Bank of New York's takeover of Irving Trust. And that proved an important milestone, because what they managed to demonstrate within 2 years of that acquisition was that they could retain 80% of the clients and only have to retain 20% of the staff. That gave the lie to, firstly, that clients were really keen to move around as far as their business was concerned. In fact, they're not. They're extraordinarily docile, which is another reason why there's not a big incentive to change. And I think it also ultimately led to further consolidation in the industry, because it gave people who otherwise would have died slowly the opportunity to die quickly through acquisition.
Do you agree, Marsh?
Yeah, although I don't know whether that's the major issue. I mean, if you go back 20 years, the major issues had to do with counterparty risk. What concerns me more about today is this gradual falling away of ethics and risk management. After the Glass-Steagall was removed in the United States, the companies that used to be the bridge to capital markets globally for American corporations and world corporations, suddenly became product companies of their own right, focused on their own products and pushing revenue. Well, I've seen, and with that, this push for revenue right out of the C-suite comes this gradual decrease in ethics and risk management. You only have to look at the Wall Street Journal every day to find another major financial institution settling with regulators for north of $100 million.
John, do you agree with what Marsh was saying there about ethics?
I mean, Yes, I mean, that's across the whole of banking. There are two fundamental phenomena that have happened. The one is that the risk profile of banking has increased dramatically, and that's not just massive regulation, it is the sheer quantum of transactions we do, the number of countries we cover, the sheer complexity of our products, so the risk profile has changed. The ethics, I don't know if, I don't believe that people are unethical. I think that will be the wrong impression to give. I think it is incredibly difficult to define what sound, acceptable, strong behavior is in the financial services generally, and to some extent in the securities services business. But what we do have to remember is that we look after basically people's savings, even though at an institutional level, and we actually have to strive for the highest possible standards.
Satvinder, do you think there's a generational issue in this area?
I'll take a step back, and if you look at the way the industry has evolved, I'll take a slightly different perspective. I agree with everybody's comments on the shifts that have happened. I think the more fundamental shift is in the perception of the industry as well. We've gone, and I paraphrase what people have said earlier, from being plumbers to sexy plumbers. And that's been a big transitional shift. What does security services do? Post-trade facilitates the development of the capital markets. Now, you can have a reactive role, you can have a proactive role. And I think in the last 20 years, helped by some of the crises that have happened, our role has really moved to the forefront of what's happening in the capital markets. We are now involved in shaping front office strategies, not somebody printing a trade and throwing it across and saying, deal with it. So we are in the center of organizations now. That's been the biggest shift.
But having moved center stage, are you rising to the challenge?
Yes, we are. I'd like to say we are on multiple fronts. One, from a business perspective, yes. Two, we're driving the conversations. More importantly to me, we're attracting the best talent as well. And if we have the best talent, we'll come up with the best ideas, we will drive the business forward.
Marsh, you've got your arms crossed. I'm guessing that might be a sign of what you're thinking.
It's hard to equate the statement that we're ethically okay when 18 institutions tried to fix LIBOR this last year. I think what Satvinder implies, not so much about ethics, but we used to be a transaction processing business. And some work we did in the early 90s showed that most institutional investors only spent 16% of their funds on post-trade activities. They did 24% on pre-trade and 60% on trade. So custodian banks that wanted to grow had to do the post-trade excellent, but they had to get into the pre-trade trade business. So what you're seeing now is a broad spectrum of products that we never had 20 years ago or never could provide. So, I mean, I was told at Chase in the late 80s, banks are not in the information business, they're in the transaction processing business. They love to crunch those checks. But now you can't be a custodian except being in the information business.
That genie is sort of out of the bottle, isn't it?
Yes, I think it is. And I think that the challenge is how to use that information wisely and in ways that actually benefit the clients. And the danger, of course, is that you use that information for your own benefit. Now, to the point about whether there's a standard, as far as I'm aware, the people in the United States came up with a standard as to how people should conduct themselves in this industry a number of decades ago. There's a fiduciary standard of care. It's well understood legally, and a number of people, to Marsh's point, have clearly fallen short of it.
I think the other way of looking at this, this is an industry that at the end of the day was put in place to service the investment process and to allow investors to invest efficiently domestically and, more to the point, on a cross-border basis. And the reality is it's done exactly that in spades. We have, if any, it's cheaper now to invest even across a wide variety of instruments, and it's ever been. The secular trend towards more and more cross-border investing in particular continues. To some extent, if you judge this industry by what it was designed to do, it's succeeded admirably.
How would you react?
yes, I think if you define the terms, you can automatically guarantee success. And certainly we've defined the terms, and we have on those terms been very successful. I think the interesting thing is that actually when Global Custodian started 25 years ago, it was all primarily around a giant pool of American capital investing overseas. I think the interesting dimension now is that there are significant pools of capital in many emerging countries driven by demographic growth, places like Korea, Indonesia, in the Middle East, in parts of Africa, in Central Europe, which 25 years ago, before the fall of the wall, had no capital markets whatsoever. Now there are significant pools of capital. I think the important thing that this industry needs to do is to make sure that as those pools of capital establish their sense of fiduciary responsibility, they follow the right model, which may not be the current model.
John, would you agree with what Robert was saying?
I mean, a couple of things I do disagree with actually quite strongly. I mean, the first is there was an implication that the industry hasn't evolved, that it actually has been very slow incremental growth. If I look back to 1989, which is when I started in the business, and I compare it to the business we have today, there has actually been incredible change. And I would argue that a lot of the players are consistent, actually quite simply because they have been willing to change. If they hadn't been willing to change, you would have seen many more new entrants coming into the market. So it actually is a reflection of, in a way, the dynamism of the industry that has meant that, yes, a lot of the same players are still around the table. And as far as ethics go, I think we have to be very, very careful. We're talking about the securities services business. It actually has a strong fiduciary role and element, and I've actually always found it to be a very, very ethical, moral industry. That doesn't mean that things haven't happened elsewhere in banking. I don't deny that, but we have to be very careful that we don't assume that just because somewhere there are a couple of rogues, that everywhere there are rogues. In this industry, actually, the standards of behavior have been very, very high, and I haven't seen any major fraud, malpractice, etc. in the business.
But I suppose even, I'm not going to say if that's true, if that's the case, in some ways it doesn't matter, does it? Let's not let facts get in the way of the reality, because an impression has been formed, and we all know confidence and an impression go hand in hand. And how do you combat that impression that many people do have of problems having been had?
So I think, first of all, you've got to acknowledge the sins of the past. And we are part of a banking industry. The banking industry has done things that has made society and the regulators uncomfortable. So the pendulum will shift from one extreme to the other. We're part of that process of shift. I think the main point here is, from a security services industry, whether you look at it that way or a post-trade, it's working with the regulators, making sure the confidence is built. To John's point, there are a few things that happen in the industry that collectively we're not proud of, but the majority of the industry has served its purpose, has continued to keep the investor interests in mind, and has built itself around the end investor. So I think making sure that point gets across, making sure the point around working with the regulators, we spend a lot of our time educating regulators on global best practice. We see our job as educating and transferring best practice globally, and our job is to facilitate more and more flows coming cross-border or domestic. As long as we keep playing that role, I think we're in a good place.
Okay, well, I could chat to you all for a lot longer, but we've run out of time here on Cyboss TV. But I know your panel session's coming up, isn't it? Charlie, you're moderating. What time is the session?
I believe it is on the hour, so
2 o'clock.
20 minutes from now.
20 minutes from now. So if you've enjoyed my discussion, as I have with my panellists, do go and join in their panel session at 2 o'clock. But for now, let me just thank Charlie Ruffle, Robert Kay, Marsh Carter, Satvinder Singh, and John Gubert. Many thanks, gentlemen, and we'll be back shortly on Cyboss TV. Bye-bye. Welcome back to Cyboss TV. This our last session of the week. Where on earth has the time gone? Well, for this session we're going to be looking at collateral challenge. And I'm delighted that I've been joined to my right by Mark Jennis, DTCC. Welcome to Cyboss TV, Mark. Thank you very much. Joe van der Velde, Euroclear. Yep. Good afternoon to you, Joe. And Florence Bonnevet, BNP Paribas Securities Services. Welcome, Florence, to you. Mark, come to you first, but I'm going to pose the question to all three of you. collateral challenge, the sands of the collateral challenge are still shifting. What's going on? Where are we going on this?
Yeah, I've been in a number of panels all this morning trying to figure all of that out.
So you've got it figured now?
So yeah, we're working on it. The challenge in collateral management is as long as there's increasing regulation and we're trying to satisfy that regulation, we're still trying to work out exactly the right solutions to that. And so I think we're still in the stage now of understanding the regulation, but now coming up with solutions. The challenge that we have in this space is who knows what's going to happen after these regulations? You know, will they be enough to address the issues that were in the future, or are there going to be additional regulations that are out there? So the big driver for us is really regulation that has a big impact in the solutions that we do.
Florence, would you agree with Mark? Are we going to get time to catch our breath, or is it going to continue to be as relentless?
Well, I think it's kind of both, because the problem is it's not really set yet, but we need to get ready. So we need to come up with solutions. Some of it is already in action, like in the US, OTC are already cleared, so we need to provide solutions to clients. The industry has to get ready, and still, something are still not set. So on one hand, you need to get ready, and on the other hand, you need to keep par with new regulation, which are put in place. And this whole thing is going to last, let's say, until 2020 to the minimum. So it's like you're running the marathon, but at the same time, you are doing the sprint from time to time. So it's a bit tiring, but quite exciting, I would say.
Joe, are you out of breath from all this sprinting and marathoning?
I think there has been a lot of, over the last years there have been a lot of debate about the amount of collateral that is going to be needed and how are we going to serve all the additional collateral needs coming out of that new regulation. I think people now start to realize it's not only a question of the size of collateral that's going to be needed, but it's the whole process and making that process more straight through, because once central counterparties come into the game, all that will have to work as clockwork. Yeah? Whereas today a lot of that is done between parties, and I think there's going to be new rules coming in, there's going to be new parties coming in, so I think the whole making it more straight through with new parties is going to be a big challenge from a process point of view. Yeah?
Big challenge is that normally means a big problem. Would you call it a big problem?
I like to think of it in the optimistic way. It's a challenge, and I think that the key to that challenge is ensuring that we engage all different participants in the industry as part of that. The only way you're going to do this is to work together with the industry to work this through, and I just came from a standards forum, and I would also say that having standards in the industry and trying to work with models that work for the industry is quite helpful in these types of solutions also.
But of course, achieving standards and agreeing on standards takes a lot of collaboration, and we've heard a huge amount all week about collaboration, but you never quite know whether people are talking about it because they feel they should, or whether there's a genuine movement towards collaboration.
Yeah, I can just give that evidence from my own conversations. We've been involved in many different industry meetings across the globe and some of the solutions that we're working on, and we do sense a collaboration as different constituents are realizing the regulations are close and we need to collaborate and we need to get this done. And so I think the impetus now is to start moving towards action, and I think you're seeing therefore a lot more collaboration.
Are you in agreement on collaboration? Do you think it's real, or do you think it's, for some people it's still sort of maybe just talk?
No, I think there is. Well, I agree with Mark that time is running out, but I think there is generally more collaboration. I think people start to realize that while you collaborate or you open up your system, that is not necessarily a threat, yeah, because everybody is contributing his own skills, yeah, whereas people like ourselves and the DTCC, we provide core infrastructures. You have the custodians that provide the services towards the buy side, and I think people see the complementarity in all of that. Yeah.
Florence, the collateral challenge, of course, is driving new models, which is great, but what tests for the industry does that create? What challenges do the new models create?
Well, I think the main thing is still, since the regulation is not stabilized yet, you need to be able to build very, very good models and very strong infrastructures on bases which are not firm. So it's very difficult to like you're building a building and you don't know where the foundation is going to be. So that's quite challenging. I think the second big challenge is it's not a one-size-fits-all system. If you are an asset manager, or if you're in an insurance company or corporate, you're not facing the same challenges. If you're global or if you're regional, you're not going to find the same solutions. So for providers, we need to have solutions that are suiting the needs of everyone. And I would concur with my panelists that indeed there is a good cooperation, but the stakes are high. So the stakes are so high that without cooperation it wouldn't work. And even though it's still quite challenging because we need to address the needs of everyone, and this is a mandatory requirement, so it's just not for fun. You have to comply with regulation, you need to deliberate on time, whatever it takes, and it takes a lot. So I'm glad everybody is working together on it.
I'd love to meet the banker who thought regulations were for fun. He or she would be an interesting character. Florence's point about one size doesn't fit all is an important one, isn't it?
Yeah, I think on the conversations we have, and we were talking earlier about the buy side, if you look at the buy side, depending on whom you're speaking to, your solution may definitely be varied. So you have to be careful that you don't try to create one solution that works for everybody, because the truth of the matter is there are going to be differences in the way different firms approach some of these challenges that are out there.
And as different firms do approach it differently, that will present difficulties of its own.
Well, I think, to complement on that, I think there are a number of firms that are, on the other hand, looking for efficiency. So in terms of typically on the dealer side, I mean, who are much more familiar with the whole collateral management process, they're more looking at streamlining the whole process, hence the collaboration that we have recently announced between Euroclear and the DTCC. Whereas on the other hand, more on the custodian side, I think that's more, the challenge is going to be how are we going to interact in an efficient way between our infrastructure world and the world of the custodians, which have a specialty and much more differentiation toward the buy-side client. So I think it's the challenge is going to make those different collateral systems work together to provide a streamlined process. Absolutely, yeah.
And Florence, how much time do we have to do what Joe was just setting out?
I think it's already work in progress. I think we're going to sophisticate the approach up till the end. So I'm positive because I think things have been moving on very rapidly during the last year. So we're getting there. But since we don't know where we go exactly, it's very difficult to figure out if you've reached the end stage, which I don't think is going to be happening before, let's say, 5-6 years.
So this time next year, a Sibos TV of Sibos 2015, are we still going to be talking about the same problems? What do you think will happen in that interim 12 months?
Actually, I think when this happens next year, we will be right near some of the regulations that are requiring implementation. And so instead of talking about what may be, we will be more about what has been done, and hopefully most people will have felt that they've satisfied most of those requirements that are out there. So I actually think the next time we talk will be a real interesting one, because a lot of the regulation starts 2015, the end of 2015 and beyond.
Okay, well, I look forward to that. But for now, ladies and gentlemen, thank you so much. Thank you, Mark Jennis, Joe van der Velde, and Florence Bonnevet for talking to me here on Sibos TV. That's it. That's it for today, and that's it for the week, that's it for the year, that's it from Sibos TV. I've been Daisy McAndrew, your host for the week. I've enjoyed every minute of it. Do enjoy the last day today. Who knows, maybe I'll see you next year. Bye-bye.